Hi, I'm Raoul, and welcome to my show, The Journeyman. This show is really my exploration and journey into that nexus of understanding between macro, crypto, and the exponential age of technology. You see, I think all of these things are coming together into this exponential age thesis that I built over time. One of the things we all understand is that there is a future where blockchain and AI come together. And I want to explore this a bit more. And I'm going to do it with one of the true OGs of the space, Barry Silbert. Barry's an old friend of mine. He's been on Real Vision since the very early days, I think 2014. He's a great thinker in the space, a great pioneer. Obviously, he built Grayscale. He built many, many businesses in the space. And what he's now seeing is a huge opportunity, an early stage opportunity in investing in that nexus between crypto and AI itself. And I think it's going to be a fascinating conversation. And because it's Barry, we'll get to hear some stories of the past, what happened in the 2022 blow up, and all the things we want to know. Anyway, enjoy my conversation with Barry Silbert. Join me, Raoul, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Barry Silbert, how the devil are you?
Good to see you, my friend.
It's great to see you. We were just talking off camera. It was like 2019 was the last time you were on Real Vision. You've been on several times in the past, and it's just great to see you back. You and I caught up recently, and it's great to see you back.
It's good to see you too. I think I'm on a 5-year cadence of chatting with you on Real Vision.
Exactly. So listen, for people who don't know about you, your story, I mean, I met you quite a few years ago via Dan Tapiero, I think, and other mutual friends. Give us your story. How the hell did you get into this space in the first place?
Well, let's see. Let's go down memory lane. So I was an investment banker.
I'm sorry, it happens to most of us.
Yeah, and then my soul started shriveling up, and I saw the light, and I decided it was time to go try to build something. And so in 2005, I started my first company called Second Market, which was really the first ever private market for stock market for private stock and illiquid assets. And it was kind of right place, right time. Because credit crisis hit in 2008, IPO right. Market shut off, and there were a bunch of really, really great companies like Facebook and Twitter, and Second Market was the place to go buy that stock. And it was a great business, and my first entrepreneurial foray taught me a lot, and along the way I learned about this thing called Bitcoin. It would have been 2011.
Who from? How?
It was either the Wired article, or Jason Calacanis did some kind of podcast or video about it. And I was like, oh, that's super interesting. And in 2011, I was still of the belief that we weren't kind of past the worst of the credit crisis. And so I was in bunker mode. I was like, all right, like, what should I invest in?
We all were.
We were like, it can't be that easy to kind of get out of this thing. And so I started digging in, and for 6 months, I just consumed everything I could read. And at the time there wasn't a lot you could read. And I met all the people that I could meet, and there were not a lot of people to meet. And eventually it would have been in early 2012, I said, you know what? I think that this has the potential to be world changing. And I remembered thinking at the time, if I didn't have the cojones to actually do something, I would regret it the rest of my life. And so I started buying $1,000, $5,000 over Mount Gox, and lo and behold, I bought a couple $100,000 of Bitcoin.
At what price?
Between $7 and $8. And the price, I think it went to 30, and I was like, I'm a genius. And then it fell to like 5, and I was like, all right, well, that was a waste of money. And then over the next 6 or 12 months, the price started going, I think, into like the 50s, 60s, 70s. And I was like, all right, I'm definitely an investing genius, but I don't know if this is going to last. And so I started looking for companies that were building kind of the first generation of infrastructure to make Bitcoin useful and accessible. And so along the way, I met Brian Armstrong, and so invested early in Coinbase, and I invested early in Chainalysis, and invested in Ripple, and a bunch of kind of the first generation of companies that were built around that time. And it's actually really funny. I was actually using Bitcoin to make a bunch of those investments. And you would think, hey, if you invested in Coinbase and seed, you would have done really well. Had I just held on to the Bitcoin, I actually would have done better than making those.
I spoke to Wences about this, and because he was one of the OGs, and I think he stuck $2 million in at $3. And he's like, I had to reassess everything I was doing because every investment I ever made was worse than my Bitcoin.
Right. Well, and we all have these stories, us early Bitcoin people, about the money we spent in Bitcoin and what that will be worth today. And my story is, so I had my wife and I had our first daughter in 2013. And back then, we were all trying to get people to use their Bitcoin. We were trying to make it kind of a functional currency for buying stuff. And there were a bunch of these kind of bridges to kind of buy gift cards. And I remember, I think I bought $2,000 or $3,000 or $5,000 worth of gift cards that I used mainly to buy diapers. And I actually, I've never gone back to do the math, but I'm pretty sure, I don't want to do it, but I think somewhere between $2,000 and $5,000 of worth of Bitcoin in 2013 is probably a shit ton of money.
Yeah, roughly speaking.
That's a tactical term. And so, okay, so fast forward to, this was kind of 2013. I'm running.
So when you were doing the private stuff, was that a fund or was that just for yourself?
Well, so I started, it was just myself. I was doing it on the side. I used to be a pretty active angel investor. And so I was doing it on the side. And then look, Bitcoin, it takes a hold of you. And so I was running Second Market. And then I had a conversation with my board. Chamath Palihapitiya was on my board. And I said, hey, board, I was like, I think we should do something really big in Bitcoin. And we had built this business, the Second Market, where we had tens of thousands of sophisticated investors that were looking to us to buy off the run kind of interesting stuff. And so they said, okay, green light, go figure out what to do. And I said, look, it's really hard to buy Bitcoin. And I knew a lot about the history of gold and gold investing. And I knew that the gold ETF was really kind of the catalyst that made gold, kind of an available and accessible and legitimate asset class. So I said, I'm going to build a Bitcoin version of the Spider Gold ETF. And so we did a bunch of work, and I think we reached out to the SEC and said, hey, we're thinking about doing this Bitcoin ETF. And they were like, Bitcoin? Bit what? And so we very quickly realized that there was no way that the SEC was going to allow for a Bitcoin ETF in 2013. So we did something that I think was super pioneering. We launched it as a private vehicle, and then we took it public basically on the OTC QX market, which is kind of, you have the NYSE and NASDAQ, and then you have the next tier down is the OTC QX market. So we launched what ultimately became the Grayscale Bitcoin Trust. So we're doing this while I'm running Second Market. And because we were buying so much Bitcoin, we set up a Bitcoin trading desk, and we started buying Bitcoin ourselves. And we started investing off our balance sheet. And I said to the board, I want to go all on Bitcoin. I was like, why don't we spin out Second Market and then we just go all in on Bitcoin? And the board said, all right, we have your support. And then NASDAQ called and said, we want to buy Second Market. So I sold Second Market to NASDAQ and then went all in, just roll the dice, and we're going to go all in on Bitcoin. And then that was the Bitcoin product became Grayscale, the Bitcoin trading business.
Which year was this?
It would have been 2014 or so.
Wow. Okay.
Yeah. So that became Grayscale, and then the trading business became Genesis, and then we had the investing portfolio, and I kind of basically dumped all of my angel investments, all my crypto into what became DCG.
Amazing. And then so DCG then grows to be an enormous beast because it was the access point for almost everybody, right?
Yeah, we I think we're uniquely positioned to serve as kind of a bridge between this asset class and the kind of the traditional investing market. Because at the time, if you think at the time, I mean, it was, I remember when you put out, your $1 million Bitcoin price prediction, people were like, this guy's gone crazy. There were very, very few. I mean, you were really one of the first ones.
That was 2013.
Yeah. And so there were very few people that were legitimate Wall Street finance people.
I don't know if I'm legitimate, but I'll take it.
Well, you were right. And so now you're legitimate. And so, because I had developed a bit of, I guess, a bit of some credibility, kind of doing what I do at Second Market, when I started running around doing kind of the Bitcoin evangelism, people listened. And so with DCG, really for the first 5 years, it was really all about, okay, how do we invest in the companies that are making Bitcoin accessible? How do we invest in the businesses that are going to take Bitcoin to the next level? And so over the next 5 years, we launched Foundry, which is today the largest Bitcoin mining pool in the world. I mean, before we launched Foundry, there was essentially no Bitcoin mining in the US. And one day, you may remember this era where there was a lot of fear that like 80% of the hash rate was in China. And one of the biggest criticisms about Bitcoin was that it was controlled by China. And so we kind of said, all right, well, screw that. Like, let's try to bring Bitcoin mining to the US. And the way we did it was we started actually financing, providing capital to miners in the US. And in order to get them up and running, we bought a ton of equipment from the manufacturers of the equipment, and then basically provided financing to these miners to get off the ground. And as part of that, we built this pool. And then so today, a third of all Bitcoin transactions go through this pool that we created. And
Wow.
It's Foundry USA. So we launched Foundry. We bought CoinDesk in the depths of it was one of the crypto bear markets. I think would have been around 2007, 2018. We bought CoinDesk for $300,000 and then turned that into a business that we sold a year or so ago.
So a friend of mine here, Brendan.
Yes, for a good outcome. We bought a company called Luno, which is, think of it kind of Coinbase for the emerging markets, the dominant player in Nigeria and South Africa. And along the way, we invested in, we're probably up to 300 companies we've invested in. We've invested in probably 50 different kind of crypto assets. And what's unique about our model is we're a private company. We're not a fund. And by being a private company and not being a fund, I have the luxury of permanent capital and time. So we get to make investing decisions, capital allocation decisions. Like I have the fun job of trying to predict the world in 5 or 10 years and place these bets. And I'll be, wrong more than I'm right. But when you're right, there's massive, massive payoffs.
What made you start to say, okay, we're not only Bitcoin only, but we're going, the whole crypto space is interesting? Because in the beginning, you were the Bitcoin guy.
Yeah.
There's a whole bunch of you were all Bitcoin, Bitcoin, Bitcoin. And then it changed. What changed?
It's a really interesting question. I think part of it was, like I have outside shareholders, I have employees, where it definitely felt like it was the prudent thing to do to as this asset class was growing, as there were more applications being built, to be open to the possibility that other cryptocurrencies actually have real utility. Now, I think most people are going to come full circle and realize that there's probably not much beyond Bitcoin, and that's where my head is at. But part of it was, okay, like I'm not going to be a Bitcoin maximalist just to be a maximalist. And the other is, along the way, there were a bunch of really interesting teams that emerged that I got excited about, and I love betting on the underdog. I love betting on the big ideas. I love betting on the visionaries. And
it's really an extension of what you were doing as a VC. You just start saying, okay, here's application for the blockchain technology in different ways.
Yeah, we talk about something called the DCG playbook. And so we identify protocols, tokens that we think have the opportunity to kind of change the world kind of stuff. And we bring to those ecosystems our ability to, we invest, we build, we buy, we educate, we create access. And look, that doesn't happen that often. I mean, I'm doing that, once every 5 years or so. But when we do it, we've been very successful at doing it.
And as you launch new trusts, when you've launched new trusts in the past, who are the buyers of those trusts? Why does somebody buy a specific trust versus buying the underlying crypto asset? Or, what is that mechanism?
So Grayscale, it was one of the 5 businesses that we own, has really done a good job being first mover and being incredibly, I think, creative around the wrappers that it puts in place to make accessible this asset class, which is, even today for many, many investors is super hard to access. So Grayscale, I think, has over 30 different products right now. Some are, the Bitcoin Trust, Bitcoin Mini. They have the large cap trust, symbol GDLC. Then they have kind of single token trusts. And the Grayscale model is, okay, let's open up these tokens. Let's open up this asset class to a broader universe of investors and kind of take it from a private trust into becoming a publicly traded trust. And these are access products. And so think about Grayscale. I like to think about Grayscale as it's really like the next Vanguard. It's in the way that Vanguard pioneered, index investing. Grayscale's pioneering crypto investing. The way that PIMCO pioneered bond investing, Grayscale's pioneering kind of crypto investing.
And how much assets does Grayscale have now?
I think at year end it was about 30 billion.
Wow. Did you ever think that when you started building the first product, did you think you'd have 30 billion in product?
When I raised, so we did one equity round for DCG in 2014. I remember there was a slide, and we talked about, our model and the upside. And I think Bitcoin at the time was maybe $1,000 or something. And I remember there was kind of, we had our base case, we had our upside case, and we had our moon case. And I think our moon case, was maybe $30,000 Bitcoin, and our upside case was like 10,000. But look, I think it's clear that this asset class is here to stay. It's clear that Bitcoin has an important role in the portfolio. But look, I'm excited to see the interest from the Larry Finks of the world. I'm excited to see the interest from the governments around the world.
It's been a long fight, my friend. It's been a long fight.
Yeah, and it kind of feels like, all right, like we did it. And there's a bit of, it's kind of like you discover a band in the club and like you follow them, and like one day they get, they get some major exposure and they're playing stadiums and the Super Bowl halftime show, and it's like, okay, like great. Like Bitcoin is my first love. It is my first baby before my actual children. And now I'm excited about some new stuff.
Before we go on to new stuff, the other thing I want to ask you about, because I don't really understand it, is mining. What kind of business is that? How difficult is that business to manage? Because it feels like the miners as publicly traded stocks, they kind of struggle at some points to do well. How does that whole industry work?
Yeah. Do we have a few hours? So we have two.
Feels like it's a really, really bad way to own Bitcoin.
Yeah. Okay. So we have two businesses that we own. So we own Foundry, which I talked about, which I'll come back to in a second. Then we own a company called Fortitude. So Fortitude is, we're actually mining ourselves. And what's unique about Fortitude is we've developed or created the first ever venture miner, where we are mining a lot of different tokens, all proof of work tokens, and looking at mining as more of like a venture play. So we're deciding which tokens to mine, which to hold. And it's a great business. And there's not a lot of miners doing it. So that's on the Fortitude side. And that business, look, it's all about being smart about what you mine. It's all about access to facilities. It's cheap energy. It's access to the equipment. On the Foundry side, so Foundry's business is very, very simple and straightforward. It runs the pool. So it has built the infrastructure that enables these US miners to mine Bitcoin and secure the network, and it has site operations. And so it has a team of people that essentially stand up and run the facilities for many of the miners around the country. So think of it as, where there's a part technology, part, think of it like Schlumberger, that type of business. So we are not taking at Foundry. We're not taking any capital risk. So we're not buying machines at Foundry. We're not speculating the price of Bitcoin. We're enabling the U.S. Bitcoin industry to thrive. So for us, it's obviously it's a complicated, challenging business because it's Bitcoin, because your revenue is doing this, but we don't have to make large capital investment decisions and try to assess future hash rate or payback periods. The miners do that, but the miners they have all the upside. Like Foundry doesn't have that type of upside.
So let's talk a bit about the ugly year of 2022. So you built this huge business.
Can we forget about 22?
I'd like to. We all would, because it was fucking ugly and horrible. And I know it was really tough for you. But, I know a lot of it you're still in litigation with and stuff, so we can't talk about a lot. But I just want to hear kind of your foretelling of it. What happened in 2022? Not just to you, but to the space. Because, you've been in the space for a long time. There's always leverage that blows up. There's always problems. But it was spectacularly big this time around.
Okay, so what happened was in COVID, money printer went burr, prices skyrocket in 21, and I think it was one of those situations where with most asset classes, a bubble formed. Excess leverage was essentially put in place all around the asset class, and there was a lot of known and unknown connectivity among the various lenders, borrowers.
Yeah, and there was one very big borrower in the middle of it all that people didn't know that they were half the borrowing.
Yes. Ultimately, I think that this was kind of like the prick that popped that kind of that credit bubble. You had the Luna depeg, which happened, I think, around May. So you had a lot. There were like we were not involved in Terra, Luna. We had no exposure or DCG, but there were a lot of people who did, and a lot of people who were caught off sides. And you started seeing kind of forced liquidations. You started seeing the cascading effect, deleveraging. And then where it hit us was in the middle of June. Three Arrows, which at the time was, I think, the largest hedge fund in the crypto space, missed a margin call to Genesis, the prime broker business that we owned, and they had borrowed money from a lot of people.
That's right, and nobody really knew. It was kind of like long-term capital. They were the biggest borrower on the street, and nobody knew.
And no one, the principals, they seemed to be legitimate. They seemed to know what they were doing, and so they blew themselves up. And they took down a lot of counterparties with them. And Genesis was the largest lender in the space, the largest prime broker in the space. They were the largest OTC trading business in the space, one of the largest derivative trading businesses in the space. And so when Three Arrows imploded towards the end of June, there was Genesis had to essentially kind of file financials with regulators every quarter. And they had to treat the Three Arrows credit as like unrecoverable. There was no way to know what, like at that time, kind of what Three Arrows what they had. There was no way to know, was it a fraud? Did they have assets that are illiquid? And so Genesis had to essentially do a mark to market adjustment on their balance sheet that created an equity hole. I know a lot of companies operate with equity holes, but in the financial space, certainly the lending space, that makes people pretty uncomfortable. So DCG, we had a choice. We could have either allowed Genesis to work through that situation on their own, or we could have stepped in and done something. And what we ended up doing was putting in place, which is essentially kind of, it's like a keep well, where we put in place an instrument where if the money that Three Arrows owed Genesis ever didn't all come in, we essentially backstopped it. We essentially would say, okay, we will take care of it. And so Genesis, was living to fight another day, and things were starting to normalize with Genesis, and the space was starting to kind of be okay. And then FTX happened. And when FTX happened, everybody's trust in every counterparty, it evaporated. yeah, if if FTX could go down, everybody could go down. So essentially every counterparty for every for every lending platform, many of the prime brokers, people just said, you know what, I'm gonna take my money, I'm gonna take my crypto, I'm gonna put it under the mattress, and then when that type of thing happens, you had what was essentially a bank run on all of the Genesis and the similar players, and so Genesis had to put the gates up, and it ultimately resulted in Genesis having to go through a bankruptcy process.
It reminds me so much of a couple of instances in financial markets in the past. It's like the Bear Stearns moment followed by the Lehman moment. It's like you could deal with the Bear Stearns moment, but at the time it got to the Lehman moment, all trust had disappeared in everything and everybody.
Yeah,
and it was massive.
And I had lived through those, and I thought, we were like, we saw what was happening in the market in the end of 21. I mean, we were not deploying money. I was like, all right, we've got our war chest, like we're ready for whatever comes. But we could have never seen. We didn't see the Three Arrows thing coming. We didn't really have a whole lot of visibility into Genesis activities, but we didn't see that coming. And certainly the FTX thing, I mean, very few people had any clue that was going to happen.
And the other one it reminded me of, as I've mentioned this many times in the past, is 3 Arrows reminded me so much of long-term capital. When I was a salesman at Goldman, they were everybody's largest customer and nobody realized it. Of every desk, the equity derivative desk, the fixed income desk, the swaps desk, everybody. And then I mean, don't forget the Fed had to cut rates and essentially bail out all the prime brokers in exactly the same way, but there was nobody to bail out Genesis except your own balance sheet.
Yes.
And then you get the second hit from the whole thing.
Yes. So we're happy that chapter is behind us.
Yeah. What was it
normalizing?
Like? What was it like to go through it? Because it's fucking terrifying and it's horrible and it must have been really tough.
It was tough in a number of ways. One, that everything in crypto and social media is amplified, good and bad and lies. And I had never experienced a situation where there was such a willingness, and it wasn't just directed at us, but there was such a willingness.
I know, I'm like
for people to make up things and for people to believe it and amplify it. And so that was really surprising, especially given all that we have done for the space. I was surprised that there was such kind of vitriol, kind of pointed in mine and our direction. Getting a lot of death threats during this for something that I had nothing to do with was surprising. Two, I was surprised at how litigious and how regulators wield their power in ways that I just didn't know that was the way that the world kind of works. And so I have a fresh new perspective as to, and maybe hopefully this administration is kind of different, but with certainly previous, I was like, wow, is this really happening? But look, on the positive side, I had a team of people who were like, we're in this bunker with you. We're gonna fight through this, and we're gonna come out stronger on the other end. And so when you talk about valuing people's contributions and loyalty and culture and team, I mean, we are the exact same team for the most part that we were on June 11th and we are today. And that's empowering. That I know that I've got the business and the team and the model that's going to get through any shit that gets thrown our way. Now, I was, and I don't know if we talked about this when I saw you in the fall, but also during this period of time, my daughter was diagnosed with cancer. So while we're working through this and people are trying to assassinate my character online and sometimes threatening in person, I'm at the hospital while my daughter is going through chemotherapy and having surgeries. And so how
did you mentally survive that?
It was an amazing wife, an amazing team, and trying to put everything in life in perspective. And like what doesn't kill you makes you stronger. And like in the middle of it, it was hard to see how both would turn out. But thank God my daughter is 9 months cancer free right now.
Fantastic.
And DCG is kicking ass.
Well done. So when we caught up, there's Barry, newly excited, because you're always a guy who looks into the future and says, there's something going on here and I want to be involved, right? You were super early to Bitcoin. You were super early to a lot of the companies in the space. You were super early to other cryptocurrencies. You know, seeing something early tends to be what you manage to do. And AI comes along and suddenly it grabs your focus thinking, okay, where is the nexus between this and blockchain technology? And it's now kind of become your true focus right now. So talk me through this and your realization of, okay, there's another big opportunity lining up and you want to be involved.
It's an evolution in that over the past 12 years, 13 years since I first bought Bitcoin, I've always been intellectually curious about everything else that's coming out of our space. And I think for the most part, 99.9% of crypto tokens that are out there have no reason to exist and are worthless. And so my bar for getting excited about something is really, really high. And so over 10, 12 years, so look, certain things have gotten me excited and we put some money to work and, many have worked out, some haven't. But over the past couple of years, as AI has become a theme, and as I have come to appreciate the power of AI, I mean, I'm a markets guy, a finance guy. I'm impressed with your ability to kind of be, kind of an AI pioneer, as well as being a markets and finance guy. For me, I had a bit of an epiphany as to, I caught up with the rest of the world as to, okay, AI is going to be a big thing. And it just so happened that folks on my team were introduced to a couple individuals who had written a white paper about something called Bittensor in 2021 that they got excited about. And I started looking at the intersection of crypto and AI. And I think a lot of the early applications were kind of using crypto as like a payment kind of solution for AI, less so kind of building, infrastructure to build AI on top of. So I started, I started looking across the whole decentralized AI space. I started digging in on Bittensor, and I very quickly came to the conclusion that from a theme or era perspective, this was the next big era for crypto. You had the Bitcoin and Ethereum, and you had the NFTs, and you had like layer 2s and DeFi. I think this is the next big investment theme for crypto. And there's a number of projects that have launched. We've backed a number of them, but the one that over the past year and a half that it's reached escape velocity is Bittensor. And so I decided last year, we're going to do with Bittensor, try to do with Bittensor what we did with Bitcoin. We are going to invest in it. We're going to build on it. We're going to help educate, create awareness, create access. And we launched a new business in the fall last year called Yuma, that I'm putting my jersey back on, and I'm the CEO of Yuma. I'm still running DCG, but I'm back in the game, and I'm now building this business Yuma that's focusing exclusively on this thing, Bittensor.
So talk to me about Bittensor first. What is the, I think the guys have been on Real Vision already, but just give people the overview and then what it was specifically about them that got you interested.
Yeah. So if you ask 5 people, what is Bittensor?
I tried to ask you and them when I saw you, and I'm like, it's still complicated.
It's complicated. So if you ask 5 people, you're going to get 15 answers. So I'm going to, but here's the thing. It's just like Bitcoin. In 2012, if you asked 5 people about Bitcoin, you're going to get 5 different answers. It's digital gold, it's a blockchain, it's payments, it's global money. What Bittensor is a decentralized network for intelligence. And the idea of Bittensor is to create this global permissionless platform on which any problem, any challenge can get solved by incenting the world's global intelligence to solve that problem. and the incentive is this crypto token. So the way that I have described it to non-crypto people, that I think is the easiest to understand, is the way that the internet and the World Wide Web was the internet of information. Bittensor is building the World Wide Web of intelligence. And so the way that Bittensor works is anybody can launch what's called a subnet on top of Bittensor. And these are specific problems that are trying to be solved by harnessing the global intelligence. And so it could be compute, it could be inference, it could be data, it could be training, pre-training. It could be there's subnets that have been launched to predict the price of Bitcoin, to predict sports scores, and so in the way that 30 years ago with the internet, when the browser was launched, and it created this Cambrian explosion of websites. Before that, you would access the internet via Prodigy and America Online, kind of akin to today's OpenAI and Claude. Bittensor is ushering in the whole new era of openness and permissionless innovation, and it's exploding right now.
And so, who are the kind of people who are on these subnets and on the network itself? Are there people who are providing data and they're monetizing that, monetizing their compute? How do people hear about it, and what is it attracting as an ecosystem?
Well, so you had asked the question, kind of what got me excited about it, and a number of things got me excited about it. One is it's such a refreshing change to be surrounded by people who are mission-driven, ambitious, who are trying to solve the world's problems. And crypto is a mechanism to do it, but it's not all about crypto. It's not about it's not just about number go up. It's about, okay, how do we address these problems that could only be solved for by incentivizing the world to help you kind of solve these problems? And so when I met the founders, the writers of this white paper, I, like everybody, was inspired by them. That's number one. Two is Bittensor was launched. It was a fair launch. It's just like Bitcoin. It was a white paper that was then turned into code that then launched. So there was no VC round. There were no allocations to foundations or team members. So everybody that is in Bittensor right now got there by being genuinely interested in the technology and buying or earning Tau, the token. So you have this organic community that is formed, that is mission driven, that is ambitious, that has kind of earned their way into having a seat at the table. And by the way, it has the same token economics as Bitcoin. So it's got 21 million cap. It's got the same halving concept as Bitcoin. So it's very, very easy to understand. And what has happened over the past few months has been called an upgrade of Bittensor, where the subnets that we just talked about, each one of those subnets actually now have a token. And so people can now.
So that's sort of like layer twos.
It is, but it's not in a very important way. The distinction is every single subnet token is traded in and out of Tau. So your functional currency, your denominated currency for all these subnet tokens is Tau. So as people are trying to speculate as to which of the subnets they think are generating the most valuable intelligence, when they buy the subnet token, they're essentially indirectly buying Tau, because it's traded out of liquidity pools. So there's 88 subnets right now, and the one's launching every 2 days. So you have this community of builders, 88 different teams for the most part, who are trying to solve a problem, but they're all like joined arm in arm, because at the end of the day, if they can drive utility of Bittensor and Tau, if they can attract capital into their subnet token, it just flows into Tau. So it's two subnets may be doing the exact same thing, and one of them may just kick ass. If that subnet can bring in hundreds of millions of dollars into the Bittensor ecosystem, and that subnet token skyrockets in value, that other subnet, their token in US dollar terms is going to go up as well, because of the success of those subnets. And so it's a very collaborative community. And I'm unaware of any other project in crypto that has the same dynamic. Because if you think about like any tokens that launch on Ethereum or Solana, essentially no value accrues to Ethereum and Solana. I mean, you have transaction fees, but ultimately those teams are all about, okay, I want to create value for my own token. They don't really care ultimately whether or not Ethereum or Solana is successful.
No, it's closer to NFTs, which are priced in ETH.
Right.
Let's say
that would be the closest analog. Exactly.
And it's early stage. What kind of people are in the ecosystem? Is it all kind of wide-eyed, super smart crazies where things normally start with? These people are like, oh, wow, I've discovered this new... Who's in it? And what are they... I know it's relatively broad and deep, but give me an idea of how big this ecosystem is and what kind of people are involved.
For Bitcoin OGs, we are circa 2012, 2013 right now.
Yeah.
And look, if the price is any indication of kind of where it is, the price of Tau, it's like $200 right now.
Yeah.
So if you kind of look at like in the history of Bitcoin,
what's the market cap?
It's 1.5 billion or so.
Right. Okay. Yeah.
And so you have, in the same way that the early pioneers in Bitcoin were more kind of libertarian leaning, which some people would call me and them crazy, but that was a philosophy. In Bittensor, it's really more AI crazies.
Yeah.
And
as I met, and they're very technical people, and they're all different backgrounds,
but legitimate backgrounds, like legit. And so that's inspiring. So you spend time with individuals that are building the subnets, and then what's happened really over the past couple of months is there's a real explosion of the infrastructure that's being built to make either the intelligence that's getting spit out of these subnets accessible or monetizable. There's an explosion in the applications that are being built for people to discover subnets and to invest in subnets, to track subnets. And it's as we're kind of going through this market correction right now, there's this small community of people. We're all just kind of heads down doing our thing at Bittensor, and things are growing really fast, and people are, generally speaking, not being distracted by what's happening with crypto and the macro stuff.
Because it's almost too early to matter right now. First, you got to build shit.
We all want to move faster. We want to do more. We want to, before the world discovers this, we're all trying to properly position the businesses that we're building, the investing that we're doing before the world wakes up to this amazing thing that's being built.
So how I guess you're thinking about it right now is like early stage build of EVM, where it's all developers, it's the building out of use cases, what's happening, as opposed to token activity, retail investment, total value transacted. It's too early for that, right?
It's too early, and the infrastructure isn't even there yet. Like right now, if you want to buy subnet tokens, you need to own Tau, and there's half a dozen sites you can go to where it's not quite as bad as Mt. Gox, but it's kind of like that early clunky. Yeah. I want to express my view. So Grayscale launched a product for it. So there's the Grayscale Bittensor Trust. So again, just the playbook. So just like what we did with Bitcoin in 2013, we're doing the same thing with Bittensor. And Yuma, that would build it, the business that we're building, one of the areas we're really focusing on is how do we make subnet investing more accessible to a larger group of investors who don't necessarily want to, stake or swap, or who don't care what a Uniswap pool is, and will never care what it is. But they just want to make a bet on what they think is going to be the next Amazon of the World Wide Web of intelligence.
So when you're looking at doing layering investments on top, using the playbook, is it the equity side or the token side or both that you're looking at? And what kind of opportunities are you focused on at this stage? Is it infrastructure and, how are you thinking about this?
So I generally hate any projects that are trying to create enterprise value or value for both equity holders and token holders.
Yeah, it's weird.
And so we really do try to be focused and disciplined on, we're either investing in the subnet tokens, or we're investing in Tau, which again is subnet tokens is kind of indirect way to play Tau.
Yeah.
Or we're investing in businesses that are building. I'm looking for the Coinbase of Bittensor. That's that's what I'm looking for now. I'm looking for the BitGo of Bittensor. I'm looking for the chain analysis of Bittensor. And so our investing is infrastructure, it's subnet tokens, it's Tau itself. And then with the business with Yuma that we're building, we just want to be an easy way for people who want to access Bittensor, if they want to build a subnet. We've launched an accelerator. So if you have an idea for a competition that you want to run, where you want to incent the big brains of the world to compete, we will help you get that off the ground. If you own Tau and you want to stake it, you can stake it with Yuma. We're wearing a lot of different hats, and at the end of the day, it's all to advance the vision and the mission of Bittensor that the founders have created.
It also has a feel of Bitcoin mining about it, where you're bringing your hardware and your compute to secure the ledger, and which you get rewarded for it. Here we're going to be different people bringing different aspects to it, whether it's data, whether it's compute, whether it's inference, all of these things, right?
Well, I'm so happy that you brought up that example, because take a step back. Today, there's annually there's about $12 billion of Bitcoin that gets emitted annually to the miners. And that $12 billion is being spent to secure the Bitcoin network, which is great, super important. Does it need to be $12 billion? Probably not, but it is. Bittensor is instead taking those economics and using it as an incentive to pay the providers of the compute, the owners of the models, the owners of the data,
to network infrastructure, as it were.
Exactly. And today,
decentralized.
And so today at the current Tau price, it's about $500 million that is up for grabs in Tau, that's made available to all of these different stakeholders. And so as the price of Tau goes up, that 500 million becomes $1 billion, becomes $5 billion, becomes $10 billion. And all of a sudden you're talking about real money to create this amazing incentive for whether you're a large enterprise or you're a grad student, at night, in your dorm, trying to figure out how best you can contribute to the Bittensor network. It's a very powerful concept.
Is it so decentralized that it's impossible to go to, let's say, universities and use their compute, or for them to use this network as a way of accessing intelligence? How does that process work of bringing people in outside of word of mouth from one geek to another in AI?
So there's no company behind Bittensor. There's no
foundation. There's nothing.
There's a foundation that is mainly focused on building kind of doing the core code, but the foundations of the process of basically being dismantled to make it fully decentralized. So what you have is like all the listings that have happened for Tau, like every place that Tau has been listed has been done, either because the exchange recognizes, hey, this is an asset we want to trade, or there's somebody who has basically called, the head of listings at these exchanges every day saying, list Tau, list Tau, list Tau, as opposed to writing a bunch of checks to kind of have something listed. And so you have the community that's driving this forward. But to answer your question, each one of these subnets, each one of these 88 subnets, there is a team behind it whose sole job is to, I'm going to launch a subnet to create some kind of intelligence that is going to basically be commoditized, not commoditized, but like monetizable. And then it's their job to then figure out, who is my end customer? So that's the output. And then they also want to make sure that if you have the ability to compete, if you are somebody who has the excess compute or the data, they need to make sure that that party knows that, hey, here is a subnet that you could compete on and get paid to do it. So all of that excess compute, all of that stranded data, all of the models that are being developed and tested, Bittensor is a place where today you could go there and start to monetize it. Of course, you're getting Tau, but it creates this flywheel effect where you have this entire community that is, like I said, arm in arm, trying to build better subnets, create better intelligence, monetize that intelligence, and drive this worldwide web of intelligence forward.
And how are they going to deal with, or how's that community going to deal with the fact that intelligence is almost going to zero in cost because of the massive warfare between all the major AI competitors, including China, plus OpenAI, plus everybody else, Perplexity or whoever.
I think it completely validates the whole Bittensor model. Think about the internet. At the time when you access the internet via America Online and Prodigy and CompuServe, and all of a sudden the browsers launch and you can now get the exact same thing for free that you were getting via Prodigy America Online. This is what Bittensor is enabling. So whether it is cheaper, faster access to compute, or cheaper, faster access to models, or cheaper, faster access to data, by leveling the playing field and making it accessible to anybody in the world is what is going to enable the creation of the Ubers and the Airbnbs and the TikToks and the businesses that were built on top of the internet that you could have never have imagined Uber in 1995.
And then
right?
You don't have a single point of failure, which is the API from OpenAI or the API from Meta, Gemini or whatever.
Well, and you have you certainly have the redundancy and scalability, but you also have, there is no gated access. There's no censorship. It's just like the internet and the World Wide Web of information. You're opening up this intelligence to the world. And now it's up to the teams to figure out, how am I going to use this intelligence that's being generated as a way to pay my bills and to monetize? And it's very cool because in Bittensor, you're seeing subnet teams working with each other. You're seeing applications being built on top of a number of subnets, where they're pulling intelligence from different subnets and creating a product that's then monetizable. Where at the end of the day, for Bittensor to be successful, you will hopefully be using applications built on Bittensor, and you will have no idea that it was built on top of Bittensor.
So there's an early vision that people share. Let's say the Bitcoin white paper, the peer-to-peer global cash system, right? That was not what it was in the end. So how do you think this changes? So I want you to now go ahead 5 years, 7 years, wherever it is, somewhere in the future where it's broader, deeper, more developed. What is this thing? Because it's probably not what you think it is today.
It's not. The boldest prediction that I could make for Bittensor is it could be a better version of Bitcoin as a global store of value, in that instead of spending the $10-12 billion a year that is spent to secure the Bitcoin network, imagine if you spent that $10 or $12 billion to incent a global problem solving network of people who are looking to solve major world problems. And if that 10 billion became 20 billion or 50 billion, $100 billion, think about the magic that could happen if you harness that. And again, I'm not suggesting that it's not valuable to spend $10-12 billion a year to secure the Bitcoin network, but Bittensor's got the exact same tokenomics as Bitcoin, as having decentralized. So that's one thing of what it could be. But I could have never predicted, Uber in 1995 that would emerge. In fact, I saw the Uber deal when it was like a seed Series A, and I was like, that's a terrible idea. No one's going to get in someone else's car. So shows you how much I know. But I do think that Bittensor, it has the religious feeling of the early Bitcoin adopters, but in trying to solve, digital gold, decentralized money, eliminating government control over, your pocketbook, trying to instead help address major problems in the world through harnessing global intelligence.
And it feels that the future of the internet is intelligence at scale. And it feels that, one of the potential outcomes is this is not just about intelligence. It's just a decentralized internet's the wrong word, but
it's not even AI, honestly. I mean,
no, it's not.
This construct, and that's the thing, is these subnets are being launched right now. I mean, some of them are directly AI, it's inference or it's, training or fine tuning, but these subnets, they're just a competition where there's essentially an incentive for people to compete. So anything that you want to try to get people to compete around, that's what the subnets are used for.
Yeah, exactly. And so we might think it's AI now, but we literally have no idea what this is going to be used for. It's for decentralized work teams to get incentivized for activity that they do on behalf of others.
Yes, and have the incentive to work
So
together.
it's a coordination layer.
Exactly. That's exactly right.
Fascinating. So what's next for you? Just continuing to look for companies in the space, invest in the space, trying to build this out?
Yeah, we're building out Yuma's team. There's a lot to do. It's a fast growing space. I still have my DCG hat on, and so I do still oversee all of DCG's investing activities. I'm still going to die on the hill that privacy tokens and Zcash in particular.
You've been shilling me those for years.
I have never been as convinced that privacy tokens and Zcash in particular we're going to wake up one day, people are going to realize financial privacy is important to them, and oh wow, there's a version of Bitcoin that's private.
How big is the Tau trust so far? How do people find information about that? Which is obviously is that part of DCG or part of Yuma? Which
so it's a Grayscale. So Grayscale has Grayscale Potential Trust. It's not yet publicly quoted, but that is all of the products become publicly traded. And so stay tuned for that. But people who are accredited investors can go to the Grayscale website, go to Grayscale Potential Trust, click a few buttons, and then they can invest in the trust that way. And Yuma, we will at some point this year, we'll be rolling out product solutions for people to get exposure directly into the subnets themselves. And so that'll be a Yuma solution.
Amazing. Listen, my friend, super fascinating. Let's see where it all plays out. It's complicated to get your head around because it is very different to anything else. And I've always found that you've been very early in finding some of this stuff, even though you've been dead wrong on Zcash so far. But
well, I'll come back well before the next 5 years and say, look how right I was.
Yeah, just don't go back on Twitter and say it's going to be a big week.
Deal.
All right, good to see you, and I'll see you soon.
Thanks.
So as ever, fabulous conversation with Barry. Lots to unpack there. But the big thing is, look, it's very early in this kind of idea of distributed, decentralized compute, AI, inference, all of these things. Most of us don't yet understand it, but Barry has always been early to big mega trends. And I take it seriously when he really dedicates himself to something. So it's something worth looking into, something worth thinking about, and adding to your mix of where the future may go, where the future of the exponential age will lie. Anyway, I'll see you next time.